October trading has started with a bang after positive moves across the board last month. Global stocks, along with Wall Street shares, repeatedly hit fresh record highs despite the varied risks in September. Cryptos were not left too behind, with Bitcoin reversing early setback to recover to edge towards its record high set in August. And on the other hand, safe haven demand pushed gold to become a big winner. October is predicted to be broadly similar, with a few tinkering on the edges in trade moves. First, let's take a look at how broader assets traded over the past month. Bitcoin was the real winner, along with gold. The OG token surged 12.5% over the past month to recover to above $122,000 and edge towards its all-time high reached in August. After a weak performance at the start of September, crypto investors got into the game in the last week of the month. Gold, though, extended its record-setting rally. Bulls pushed the yellow metal towards $4,000 an ounce, with gold gaining over 11% in September. The precious metal is up nearly 50% for the year and counting. Crude was more volatile but closed out the month down nearly 5%, replicating August's near 6% loss. Dollar was another loser last month. However, a slight pullback limited the losses to 0.2% compared to over 2% fall in August. Now turning to the Asia Pacific stock markets, benchmarks from Australia to Shanghai rose sharply. Tech stocks in the region were the real leaders. Japanese benchmark Nikkei gained over 7% to top the Asian chart. The recovery in Indian stocks was a welcome sign, with the Sensex up nearly 2%. Shanghai and OC indices closed in the green with modest gains. In the Americas, AI frenzy boosted Wall Street stocks, while the S&P and the Nasdaq hit multiple new highs. They lost momentum towards the end of the month. The U.S. government's shutdown and profit-taking were the top reasons for the momentum loss. Canadian stocks were a standout, with a 6.7% gains over the past month. Brazilian stocks, too, rose to close 2% in the green. Across the Atlantic, European stocks across the board rallied, with a French CAC leading the gains. French stocks rose about 5%, followed by 3.3% gain for UK's FTSE. South African index was the biggest gainer in the region last month, with a nearly 8% surge. Now, having looked at the market moves, let's now turn to the overall economic outlook. Let's take a look at the Asia Pacific region. In Asia, India still remains the bright spot. China's economy still faces deflation risks, a recession in its real estate and consumer demand. U.S. trade wars continue to weigh on Japan and Australia, with the outlook for most of the other regional countries in the negative. A slowdown in global trade from U.S. protectionism is likely to offset any green shoots from domestic policies in Asia. In the Americas, the government shutdown is delaying the release of much-needed data. Now, the problem is to piece together the economic jigsaw puzzle from other sources. Other data reports released are not looking great. Weakening business activity and a cooling jobs market will likely trump lingering tariff-related inflation concerns, with the Fed set to cut rates again in October and December. The outlook for Canada, Brazil, and Argentina is also negative because of Trump's trade rhetoric. In Europe, the situation looks much more worse, from deepening troubles in controlling budgets. France is not likely to meet its budget target, with politics compelling economic disasters. UK continues to struggle to fill a budget black hole, and Germany is losing its shine as the growth engine for most European countries. The best news will likely be that they avoid a recession, but just about.